Welcome back. As we prepare for a slew of economic numbers this week, I thought it might be important to mention today's close on the Dow Jones Industrial Average marks the 11th consecutive positive close for that index in so many days, which sets a pretty important record. It's the first time we've had 11 consecutive positive closes going back to 2017, many, many years. In fact, February 27th, 2017, we had 12 consecutive closes. Now, in and of itself, I don't know if if this statistic is very important, but we should recognize that the market has been very strong, and sometimes we run into a phenomenon in the markets called buying the rumor, selling the news. Maybe the market's going up in anticipation of news that would, indicate that stocks should go up more. Maybe it's already priced in. Let's take a look at the data. If we were to calculate, which we did, the 90-day and 30-day forward performance, meaning given the number of consecutive days that the Dow Jones Industrial Average is up, what will the market on average, how will it perform over the next 30 days and 90 days? Well, the white histogram bars show we see here, for example, if we have zero consecutive up days, for example, if we go down the day before, on average over the next 90 days, the Dow Jones Industrial Average tends to produce around a 3.4% return. Now, that's on a quarter, 90 days. If you annualize that, that's around 13% for the year, which is around average. The Dow Jones SP 500 averages 9 to 10, 12% per year. One consecutive daily winning streak is also 3.4%. 2, 3, 4 days, really inferior returns. We start to see superior returns on the 90-day forward performance when we see 7 consecutive days. 8 consecutive days tends to lead to a 7.5% 90-day return. Now, this data is going back to 2013, so we have quite a bit of data. However, keep in mind when we start to reach the upper limits, 9, 10, 11 consecutive days and more, that's a very limited amount of data. I don't know that it's statistically relevant, but it's interesting to see. Now, for example, when we look for those occurrences where the Dow is up 9 consecutive days, the Dow Jones Industrial Average tends to produce around a 7.9% average forward looking return, meaning how will it perform on average over the next 90 days. Now, the purple histogram bars indicate the next 30-day performance. Now, let's put this in perspective. Over the next 90 days, yes, let's say the market goes up 5, 6, 7 days in a row. That shows us the market most likely is in a strong long-term trend to the upside. And over the long term, stocks tend to go up more than down anyway. So that would indicate we're in that period of time. Now, 90 days is a long period of time. Let's say it goes up 7 days and then the market has a big hiccup. Well, it's probably going to be up more over the next 3 months. That's not very helpful, though. Over the next 30 days, I think is a lot more relevant. Take a look at the histogram bars. When the Dow Jones is up, let's say 0 or 1 day, it tends to return around a 1.2% return over the next 30 days. Now, 30 days, annualize out for the year, well, that's around 12% return. We tend to see superior returns when the Dow is up 7 days. That seems to be a magic number, 7, 8 days. But notice what happens when we go up more than 10 or 11, 12 days. Now, 12, that was only one time. 11, this is probably the second occurrence in so many years. So this is not very statistically relevant. But the data does suggest that after we go up around 7 consecutive days, statistically speaking, the Dow is probably due for some sort of a reversal. Now, again, in and of itself, this is probably not very relevant. However, the bigger picture coming away from this is that when we see a very strong market, which we have lately, and then we see a whole slew of economic numbers, we have a Federal Reserve meeting, housing numbers, inflation numbers, PCE, GDP, durable goods. We have a lot of reason for the market to move up or down. Now, the market going up, maybe this is as a result of a lot of traders and investors anticipating good news. Is the good news already baked into the cake? Well, it'll be left to be seen. It'll be very interesting to see where the market rests on Friday after all of this news is released and digested by the markets. But again, please keep in mind, 11 consecutive days. If we close up tomorrow, that'll be tying us for a record going back to 2017. If it's two more days, that'll break the record. So we're going to keep track of this and we'll revisit the charts and the news calendar with any significant updates along the way. We hope this has been helpful. We look forward to seeing you back soon.